Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. Friday saw a drop across the board for the most part. Ross takes a look at how gold, crude, and the U.S. and Canadian dollars fared. He also has a special offer for our listeners. Founder of Armstrong Economics, Martin Armstrong, takes a look at how American politics could affect the markets going into the U.S. presidential election. He comments on the possible breakup of the U.S. and Canada and whether Bitcoin will save your portfolio. Author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash, Hilliard MacBeth, takes a look at the current state of Canadian real estate, interest rates, and whether there's any sector in the Canadian economy he's bullish on. We'll talk to Ross Clark right after this.
Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on X at Charts by Ross. Welcome back to the show, Ross.
Always a pleasure, Jim.
Ross, do we have a special offer for our listeners this week?
Yeah, for the new subscribers wanting to come on board, the one-year subscription has got a 25% special on it. So, come on board, give us a try, and we've got a 2-month special you could just do there, get your feet wet, see what you think of the work that we do.
Ross, how would you describe what happened on the stock markets this week?
Well, up until Friday, it was a reasonably quiet week with, markets having a bit of buoyancy. And then on Friday with the employment numbers, some pretty big action. Started with the dollar index, U.S. dollar, which had been sitting in this quiet trading range for the last month or two. Had a pretty big day. Overall, we put out a piece a week or two ago looking at the cycle that the U.S. dollar goes in. It's about 58 trading days, and it was due to have a cyclic low here in the last 4 or 5 days. So we got a pretty big reversal today. The dollar index had been down at 104. The employment numbers came out, and it's punched all the way up to 105. Doesn't seem like a big piece of action when you look at the day by day, but overall, we closed back above the 20-day moving average, which is a catalyst point when we take a look at this cycle. And with that, strengthened the dollar index, which means that we had an outside reversal to the downside on the euro and on the British pound. And then on the Canadian dollar, where we dropped interest rates this week by a 1/4 point, the Canadian dollar down to 72 3/4. That's not a good time for the Canadian. And overall, we've had a bounce back in the oil market. Really didn't help the Canadian very much. So this is not a good omen for the Canadian dollar right now.
What's going on with gold?
Big day there. We ended up with both gold and silver having pretty good bounces during the week. But as the U.S. dollar index made its reversal to the upside, the precious metals really took it on the nose. They both managed to take out the lows of the last couple of weeks, and this was after a pretty darn good move. I think we ended up with the gold market down about $80 on the day. Silver was down over $2. And if this reversal in the dollar index continues to take hold, which it should when we look at the cycles here, should basically have about a 1 month bias to the upside in the currency, which would then put an overhang as far as the precious metals are concerned. So ideally, as the dollar runs to the upside, we'd like to see some good oversold readings occur in the silver and gold. And we take a look at the sequential model that we have, not that we have, but the model out there. And typically as the dollar tops, when assuming that will be a few weeks or maybe even a month from now, you'd expect to see some good signals in terms of the bottom for the gold market. So patience as far as any new positions are concerned there. We are in a seasonally poor period for both gold and silver. Historically, June is not a good month for those. I think when I look back over the last 20 years, I could only find 2 years where June did reasonably well. I know there are some other analysts who are looking for a bullish move here, but from my perspective, the seasonality does not look good, and the strength in the dollar index is really going to make it difficult for the gold market to do too much.
What's going on in the crude oil market?
Had a good bounce during the week. We had been down to $73, recovered up to 76, but by the end of the week we were starting to settle back. So this is after the OPEC announcements last weekend. A bit of a downside for the first day or two, but decent recovery. But, we take a look at the month of May had provided some pretty decent tests of the $76.5 level, but the crack below that and now the bounce back from below looks like we've got some pretty good resistance. And we've had 3-day bounce into the tail end of the week, but I wouldn't be at all surprised that it's back down testing the lows again.
Ross, can you tell us again how people can sign up for that special offer?
If you go to chartsandmarkets.com, the front page there has an offer, 25% off to new annual subscribers.
Ross, thank you so much for being on This Week in Money.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on X at Charts by Ross. Coming up, Martin Armstrong, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Martin Armstrong, founder of Armstrong Economics, available online at armstrongeconomics.com. He's speaking to us from Florida. Marty, welcome back to This Week in Money.
Well, thank you for inviting me.
You have two new reports out, the 2024 migrant crisis and the 2020 coup. Can you tell us about them and where our listeners can purchase them?
Well, they're available on our site for download. But effectively, the migrant crisis, what I've done is that this has been an issue that has happened before in history. And I show basically the first guy that attempted it was a Roman Emperor Valerian or Valens, and he allowed the Goths in, and they ended up tearing everything apart, and in fact ended up being a civil unrest, battle, and he got killed in the process. So it didn't really end very well for him. But it created food crises and all sorts of things. And you can't, historically, the problem that always emerges is that you cannot basically just blend different cultures together. They were not coming in basically to assimilate. They basically came in to bring their own culture with them. And in fact, most people don't realize, but our very word God comes from the Goths who used that for their deity. And it ended up being our word that we still use today, but that came from the migrants back then. The Roman word for it was basically just like divus. Things do change. And I just got back from Europe for a couple weeks, and you see the stress level all over the place. I was talking to one person. I mean, they won't even, they've taken their children out of school and putting them in private school because they're becoming a minority. And the rest of the kids don't really assimilate with them. You can't just throw everybody together. I mean, in Europe it's probably worse because you have different religious classes. So you have Islam being forced into Christianity, and then those two have always gone head to head, throughout the centuries. At least we don't have that so much in North America, but Biden has finally been, forced to, close the border. But that was the very first thing that he did. And when he got into office, the very first day, he opened the border, just threw it all open. And I can tell you, because I had the mandate from Hong Kong, and to negotiate with the Australian government. And I met with the Prime Minister down there, former Prime Minister Paul Keating. And, we wanted to buy land so Hong Kong could move, because it was going to be turned back to China in 98. And everything I proposed, the answer was no, no, no. And I said, look, I've got a blank check here. I can pay off your national debt. What's the problem? And I finally accused him. I said, is this racist? Is this what the problem is? And he said, no, they were fleeing communism. And his view was that they would change the politics of Australia because they would vote conservative. And he happened to be a Labour government. So, this migrant crisis in both Europe and in the United States has been, in part, they have assumed that because they have let these people in, they will vote for them and they can, increase their power because they know they're losing it.
More and more proof is coming out. President Trump actually did win the 2020 presidential election. What really happened during the 2020 coup?
Well, people don't realize, the report that I put together was the coup really took place in Congress. It did not, about, voting machines and counting and all that. That's all, peripheral stuff that really takes place in every election. There's fraud in absolutely every election there is. Dead people have been voting in Chicago for decades. The question is, does that type of fraud actually change the outcome? So that's where you get into this never winning, debate back and forth. But what I put out the report was very interesting because the whole January 6th thing was really staged. It wasn't staged to help Trump. It was staged to actually destroy him. And that's why you have, I put in the report, the FBI can't even tell you how many people they had there. And it's so much underhanded activity. And I was given videos of people dressed in black and, running through the hallways there with masks on and people trying to say, hey, who are you? And then, no, never mind, leave us alone. And run. And they clearly were not part of the protesters. And what you have to understand is that once the supposed mob broke into the Capitol building, that gave Pelosi the justification to call for emergency shutdown. And in that process, she imposed emergency rules. What they were afraid of was that there were 7 states that were going to challenge the vote. And if any one of them won, it would have gone to the Supreme Court, and Biden would never have been president. So I went through everything, all the documentation to show really how this was staged, and it's really gutsy to say, to put it mildly, but they got away with it. And so nobody was allowed to make any challenge to any vote, and that was the whole objective. Because if there was a challenge to the vote and overruled, then you could go into court and challenge it. And so they had to stop that, particularly with 7 states that were in question. So by doing that, that's why they needed the January 6th, storm of people so that they could declare this emergency rules. And basically they stole the election. That's how they did it. It's quite pathetic to even think that they could rig it to the point that Biden got more votes than even Obama. It really just completely nuts. And a lot of people knew it, and it just did not make sense. And economically, a president will lose when the economy is going down. That's standard. Had Herbert Hoover was elected in 1929. As soon as the economy turned down, there were one-term presidents. That's it. They're thrown out. And this was not the case. It was the economy was doing fantastic. Unemployment went down to historic lows, and under such circumstances, I don't care if it's a left wing or right wing or whoever is the president. Historically, they win. Period. So there was something seriously wrong in this whole thing. And our computer was kind of picking it up. And it was saying, look, this is going to be tight, and it's going to be 50-50 despite everything else. And it was pretty much right.
We keep hearing about civil unrest that will follow the 2024 election. Could there be a way to avoid the civil unrest, possibly by awakening the normies to what really happened during the 2020 coup?
I don't know, because I think the civil unrest at this point is just percolating, and it's on both sides. So it really doesn't matter who wins. I think at this stage in the game, neither side is going to accept it. And, like I said, I just got back from Europe, and everybody over there is just shaking their heads. They can't believe that the United States has fallen this far to like a banana republic, charging opponents and stuff like this. It's just never been done before. And you just look at the facts. You got Bill Clinton, who paid $850,000, all right, to settle and to hide a sexual with Paula Jones lawsuit. Trump gives 130, but that's 34 criminal acts. Clinton does the same thing while he's even president, and that's okay. It's the duplicity here is just off the charts, and everywhere. I met with 3 governments over there, and they were all like, and they weren't necessarily right-wing governments. All right, middle of the road, even some lefties, but the general view is what the heck is going on in the United States. And everybody, regardless of what party they were in, have recognized that the Biden administration has weaponized the Justice Department to achieve its goals. Courts reject executive privilege, throwing, Bannon in prison for 4 months. Well, you just had, the Justice Department declaring declaring executive privilege so they don't have to hand over the audio tapes of the interview for the special counsel did on Biden. That's executive privilege, but nothing else is. Depends who asserts it. when you start getting to the point where the rule of law just collapses, then the end is near. And I think that's really what our computer is basically showing, that, and the civil unrest, I mean, you've effectively gotten it to the point where people just don't trust elections anymore. And I encountered this even in Germany, because Merkel was saying, oh, well, Putin interfered in their election. If they lose, it's Putin's fault. If they win, it's their great, ability. It's just nuts. I mean, you had Hillary started the whole thing blaming Putin. I mean, he spent, over $100 million investigating the Russiagate, all fraud, never took place. And in the end, the Democrats were even fined for making up this stuff. But that's okay. Goes out, nobody wants to talk about stuff like that. And this is what's stirring the pot. People who realize there's just, can you trust anything anymore? And I think that's where the civil unrest is coming from. And like I said, it's going to be both sides.
The 22 Coup report names names, but who are their bosses?
You've gotten to the point where effectively, if you just go back and look in history, I mean, Britain and even the United States, in both cases, it's for some strange reason, the left is always the side that gets us into war, and the right is the one that tends to get us out. All right, it was like Johnson took us into Vietnam. It was Nixon that brings us out. I mean, this is routine. I mean, even the Gulf War in Britain, you had Tony Blair stand up, and he put out an apology, which is on YouTube. Very sorry, everything was wrong. We didn't understand what was happening, and all these people died because of this stuff. So it's so systemic at this stage in the game that it's largely the entire institution behind it, military establishment that even Eisenhower warned about. There's too much money in war, and that's really what's going on. So this election basically is Trump versus World War III. I mean, really. The latest rumor is that they're going to draft Hillary, and Hillary will be in instead of Biden. And so all of a sudden you're starting to see some reports, Biden appeared to be losing it before Congress. They don't do that. They're ceding the justification for Hillary stepping in or being drafted in August. And she never had a run against him or anything else. Even, all of a sudden, Biden was never going to have a debate. That's ridiculous. All of a sudden, he's going to debate Trump. That's not necessarily going to go very well, I don't think. And so when you start seeing these reports that, Biden looks like he's failing a little bit, and this is mainstream press saying it, they're laying the foundation for somebody else to come in August. And the rumor on the street is that they're going to go pick for Hillary, and because Hillary is one of the neocons. I mean, she wouldn't think twice about nuking Russia.
The crimes of the 2020 coup, what are some of them, and what are they punishable by?
Well, effectively, it's treason. So, it's punishable by death, but, nobody's ever going to bring treason charges, and it's hard to get even, people on the opposite side to really do a serious investigation, because they all know. But, they're also afraid of going after, the opposition and exposing their throat, because it may tear down the entire system. So, they're not so thrilled about Trump either. And what you have to understand is that the 2020 coup it involved both sides. And, Trump, when he ran, saying he was going to drain the swamp, etc. A little naive from the standpoint that the swamp is both sides. I had gone down to Mar-a-Lago for dinner that he held there in March of 2020. And that was the first time he really impressed me. He said he wanted to bring the troops home from Afghanistan. But the reason was, he said, he was sick and tired of writing letters to their families to say, your son died for God and country. And he said, what are we doing there? They've been fighting over borders for 1,000 years. What difference are we going to make? And you had John Bolton, all the neocons. Oh, this is outrageous. This is treasonous, blah, 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 whatever. All they want to do is keep throwing, people out to be slaughtered. For what? I really think what you're looking at with the 2024 election, you have this establishment, and they are so anti-Trump because they're afraid that if he comes back in, not only does he shut down all their nonsense with climate change and more. And people should really do a little bit of research. Climate has always changed, all right? And this was actually proposed. The first person to submit climate change on the floor of Congress was John McCain, and it had nothing to do with saving the planet. It was we should be, moving to nuclear because he wanted Europe to move to nuclear power to cut off the energy supplies from Russia. And he thought that would undermine Russia. That was the whole objective here. That's why they took out Nord Stream. This is a war against Russia, and they will couch it any way possible they possibly can. But it had nothing to do with the planet. Nothing. And you can Google it. You can check it out. John McCain was the first one to propose this.
Did the 2020 coup kick off economic destruction with the target being Agenda 2030, where you will own nothing and be happy?
I don't think they're going to be able to pull that. But the real problem we have is that this is all starting to collapse, which is why they need war. All right. And they need war as a diversion. You've got this push both in Canada and the United States to go after capital gains. Biden wants to raise capital gains tax to 44.6%. Virtually, you do that, you're wiping out the incentive to invest, okay, long term. Now you're just going to be a trader back and forth. And when you start doing stuff like that, he's also out there, he has Janet Yellen proposing, oh, we're going to go after these billionaires and charge tax on unrealized gains. All right, so fine, you take, Bezos, who owns Amazon. Suddenly he's going to be taxed every year for what his shares are worth. If in that case, you have to then start selling some of the shares to pay the tax. All right, this is what destroyed the farming industry. It was inheritance tax. The founder dies. The family then inherits the property. The government comes in and says, oh, owe 40% because we think it's worth this. And so then what happens, they have to sell off land to be able to pay the tax. So all of a sudden we have these major, holders of land. Even Bill Gates has got more land than any farmer in the country. And you got Monsanto, et cetera. Then you get into these corporate farming entities replacing the small farmers and ranchers because of taxation. So, I mean, it's this coup that is building, and these politicians never learn. They just keep thinking, okay, I got a problem. I got bigger and bigger deficits. So, shake all those people upside down to get more money to keep the game going. But we're reaching the end of the road. They are not going to be able to do this for much longer. And, they ignore history. Just look at all your revolutions. Probably more than 90% of them took place because of taxation. American Revolution, no taxation without representation. Same thing.
Could this economic destruction be by design so the powers that be can buy up the world for pennies on the dollar?
I don't really think so, because when you get to that point, even they're going to be wiped out. I mean, this is a serious crisis. People have to understand the way governments fail. When you're in these Ponzi schemes and you're issuing new debt to pay off the old debt, it keeps going until you can't sell the new debt anymore. When you can't do that, you can't pay off the old, and that's when the default comes. And that's what we're getting into. You have all these neocons just looking at their agenda, threatening China over Taiwan, etc. Well, China was the largest holder of U.S. debt. They've been selling it off, routinely. They sold off $53 billion the first quarter of this year alone. They're not going to be buyers. So if they're not going to be buyers, what happens? All right. If you can't sell the new debt, that new debt interest rates on the long end are going to go up until they find somebody willing to buy. So, I don't think those scenarios of you own nothing and be happy are going to work. They're going to all collapse into the dust themselves, because the system itself is not sustainable.
Could we end up seeing white hat military fighting black hat military within the U.S.?
Absolutely. I mean, that's the way, historically, it always goes that way. Even if you look at Rome. Rome, how many civil wars did Rome have? All right. It even broke up into 3 regions with 3 emperors at one time, during the 3rd century. I mean, so you have to understand is that, you have this complete, the stark difference between the left and the right is monumental today. I live in Florida, and I don't even want to go to California for a visit. I mean, it's just gotten to the point that California is completely so far in the opposite direction from Florida. You have to wonder if they're even part of the same country. So, I mean, that's what you're seeing. And the more Biden tries to do these executive orders and dictating from a central core, that's what collapsed communism. You cannot dictate from a central government and force everything on everybody. Canada had that problem years ago it was inflation in Toronto. They kept raising rates while they're putting farmers in Alberta and in the West into bankruptcy. One size does not fit all. And centralized government like that, it does not work. When the Federal Reserve was originally set up, it had all these branches, and each one was independent. So interest rates would be 4% in one place, 3% in another. And it was Roosevelt that confiscated all that power and brought it to Washington, and that one-size-fits-all has not helped the economy.
Is mass migration through lack of borders designed to destroy the Western world from within?
I don't know if I would say that it is a design to destroy it. They think that it's to retain power on their side. And secondly, they're offering these people citizenship through military. They want to go into, they know World War III is coming. I mean, I can tell you they're already starting drafts in Germany. A friend of our staff there, 59 years old, was called up. So, Europe is already, it's up to 60 years old. And that's going to come over here as well.
Is mass migration tied into climate change?
Not this time. Historically, there has been, when there, you look at the Huns and why did they go into Europe? There was a massive drought in Asia. The sea people moved south during the Bronze Age because it got really cold up north. I mean, there historically climate change has, in effect, created mass migrations at times, but this is not the case. They're just opening up the borders, looking to change the political demographics of the country so they can retain power.
Is there a 100-year disease cycle where every 100 years there's a pandemic hoax designed to depopulate?
Yes, this basically also, ironically, tends to correlate with migrations. When you have people migrating from one region to another, they bring diseases that have been either cured or dormant for a long time. And, for example, even when the Europeans came to North America, most of the native Indians died from disease that the Europeans brought. They were not immune to certain diseases that we had. And I mean, already you're seeing these people coming from different parts of the world through the southern border. And all of a sudden you have TB starting to show up again, polio starting to show up again, malaria. These are things that have not been around in the United States or Canada for decades.
What are the health costs and the economic costs associated with mass migration?
The way this is being handled, it's just off the charts. These people are being handed all kinds of money. And that's why they're coming. And it, like I said, it's to change the political demographics of the countries so that they will vote left and they retain their power. And that's what this is all about. But they're just giving these people everything that a taxpayer is not entitled to for free. Free health care. I mean, people, pay, thousands of dollars a month for health care. They get it for free. In Chicago, I can tell you because I know somebody who was working there, and the migrants refused, to accept vaccines. They said, "Oh, okay, fine, no problem. We lose our jobs if we refuse to take vaccines." They're just completely two sets of rules for everybody.
Does the war cycle precede the disease cycle?
Often, yes, because the war cycle also tends to involve migrations and sending troops off to one region and then they come back. I mean, these things have been going on for thousands of years. The Roman Emperor Marcus Aurelius, his co-emperor, went off to fight Persia, and when they came back, they brought the plague with them, and he died. And you had a third of the population died, and that was just from returning soldiers. The same thing from World War I. Coming back, they called it the Spanish flu. Killed an awful lot of people. So when you send troops overseas and then they come back with something a little bit more.
Is the disease cycle, in this case, man-made disease, fitting in with what looks like a psychopath cycle?
Yes. I mean, I think that we have to be very careful. I'm not very optimistic, and you have Bill Gates, who has no medical background whatsoever, is doing the same thing that he was basically forced to leave Microsoft for. He seems to like to create monopolies. So he's involved in every little health organization there, all these vaccine companies. And you have Moderna coming out and say, "Oh, well, this year's flu shot, we're going to combine it with COVID." Well, thank you very much. I will no longer take vaccines. mRNA vaccines is not a vaccine. It's created on a computer, etc. At least the old vaccines were a part of the virus and built up your immunity. I mean, that was, from the 1700s on. And all of a sudden, you had Bill Gates out there saying, "Oh, with mRNA, we're going to be able to cure everything and bring the cost down to $2 for him." Well, what are they going to charge anybody else? It's just, you've got a scandal still going on in Europe where the head of Europe, Ursula, was caught, being very friendly with the head of Pfizer, and she ends up buying the number of doses with 3 times the population. Why? I mean, it's just, find these. Then you go to Switzerland and Switzerland, I think, it seriously should be addressed because they have given all these vaccine companies, Gavi, they're all set up with their headquarters in Geneva. Why? Because Switzerland gave them not only just immunity from lawsuit, gave them diplomatic immunity. You cannot even look in their briefcase when they travel. This is completely outrageous.
Do sunspots play a role in market activity?
Yes, they tend to affect some people for sure. Plus, there are studies that suggest that when the sun goes into solar minimum, it puts out more gamma rays. And as such, what happens is the gamma rays penetrate the Earth deeper. And at that stage in the game, what you end up with is increased volcanic activity. So there's some very interesting studies that have been tracking the various different activities of sunspots and the solar cycle itself.
Do you still think Canada and the U.S. could break up? And if so, what would the new maps look like?
In Canada, it's definitely going to be west versus east. And in the United States, you're looking at more of perhaps breaking it into three parts, where the South and Midwest would be one, New England would be another, and then the western states of California, Oregon and Washington would be a third part.
Could you see perhaps British Columbia joining what they call Cascadia, all the three most western states, and British Columbia forming up a country? The politics seem to be pretty much the same.
I think the problem you have there with Trudeau is what I was saying before, is that you have this idea that one central government can dictate to everybody. And you have different economies. You have more of a commodity-based economy in the West than you do in the East. So, this activity of going after, climate change and things of this nature and dictating things to deal with, like Alberta, et cetera, and shutting down the vast majority of their economy is very serious. And it's just not appreciated, very much, I think. But this is what tears companies apart. And you always, our countries apart. I mean, you see this all the time throughout history. And, as I said, Rome broke up into three regions itself. So, you have different economies in different parts, and the centralized government does not respect that. That's also what brought down, communism.
Is history repeating?
Absolutely. I don't see... history repeats because human nature never changes. And I would say that we can, as individuals, learn throughout life. As a kid, our parent always tells us, don't stick your finger in the flame of a candle. But we all do it. All right. You tell your kid not to do it, and they still do it. All right. So we learn. Then you don't do it again. All right. But society has no collective experience. So that's why history repeats. These governments never consult history. Every financial crisis that takes place, they go, oh, that sounds like a good solution. Does anybody ever ask, has this been done before? Was it successful? What was the outcome? That question is never asked, and I don't care what country you're looking at.
We're hearing parasites could be the cause of all diseases. What are you hearing?
Well, parasites are certainly an issue. I had gotten one myself that ended up on my skin and crawled into my eye. I mean, it has affected the sight of my left eye. I mean, went to a specialist and they gave me some pills and got rid of it. But still, the sight of my left eye is slightly less than it is in the right eye. Parasites have been around for a long time. They're a life form, and they're out to do whatever they have to do to survive.
Basically, I feel there's always something trying to eat something else. It doesn't matter how big you are.
No, look, I mean, that's what life is about, right? It's, I live on the beach and you see the dolphins swimming north in the morning and swimming south in the afternoon, and they're, eating fish all the way up and back and forth. This is, part of society. Lions take down different, deer or whatever. I mean, this is how everything survives, and it provides a check and balance, I suppose, against one species from dominating another.
On X this week, Dan Scavino posted AC/DC playing Thunderstruck. Could that be a signal that the storm is here?
Well, yes. I think everybody, as I said, I just got back from 2 weeks in Europe, and everywhere I go, it's the same story. Everybody's complaining about their governments. It's always the same thing. The governments are not listening to people. They're just acting in their own self-interest. And, this is part of the problem. It's, they see it as their power, and they will not reform because they're afraid if they reform, they lose power. And so in the end, it has to be taken from them. It's the old, story that, basically, like, you can vote your way into communism, but you got to shoot your way out.
Is it true, especially in Canada, that people don't so much vote for a government, but vote against the one that's in power and they don't like anymore?
I think that is an international issue. It's also why they tend to use psychological warfare against us. For example, they demonized Trump, and then you would assign that demonization to everybody that voted for him. They did that to Saddam Hussein to justify going into Iraq and killing all Iraqis. They're doing it to Putin. And then all of a sudden, well, everybody in Russia is that way. It's part of a psychological warfare, and you can Google and check that out too. But these are things that have been done for centuries, and they know what they're doing and how to play with them, and that's what they do. And we are at a stage where they're desperate to hold on to power, and they have screwed us up so badly that it's just not sustainable. I mean, they've been borrowing year after year with no intention of paying anything back. And everybody's pensions, all this is all predicated upon, government debt being safe and secure. And it's just not. Governments are the ones that always default. At least if you owned stock or bonds in General Motors and it went down, it goes into bankruptcy, they sell off the assets and you get something back. When it comes to government, you get zero back.
Will Bitcoin save anyone?
No. In all honesty, I believe that Bitcoin was created by the government to sell the idea of digital currencies to everybody, because part of their agenda is to eliminate cash. In Canada, eliminated all your large denomination notes. Every government I have spoken to, they believe on average 35% of the economy is not being taxed. So if they eliminate the paper money and go to digital currency, they will get 35% more in taxes. That's what they're doing. All right. Bitcoin, if I give you a $100 bill, they don't know where I got it from. If I give you 100 in Bitcoin, they know where I got it from and everybody down the line. That is not privacy. All right. So the way Bitcoin was designed is a wet dream for a tax authority. They're going to know everybody, what you had, when, and why. So I would not, I really think it was a great sales job. They said it was private, but you never knew who this fictitious, Japanese guy that invented it. I mean, if somebody invented it and really had it, he'd be, make billions of dollars. Why is he, there's nobody there that actually knows who did it? In my opinion, I believe, I don't have evidence of it, but I believe it's basically just the same old thing. It was created by the intelligence community, and because at the end they intend to eliminate all paper money, and they think they're going to get 35% more in taxation.
Where can our listeners purchase your latest reports?
Go to ArmstrongEconomics.com. We have a store there where you can get, a lot of reports that we've been issuing, Canadian reports every year, real estate reports, interest rate crises. Everything pretty much is there.
Martin, thank you so much for being on This Week in Money.
Well, it's always a pleasure. Thank you for inviting me, Jim.
My guest has been Martin Armstrong, founder of Armstrong Economics, available online at armstrongeconomics.com. He was speaking to us from Florida. Coming up, Hilliard MacBeth, next on This Week in Money.
Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclico.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to This Week in Money.
It's always a pleasure to be on your show.
The second edition of your book, When the Bubble Bursts, is now available. Can you tell us about it?
Yeah, so it came out in 2018, so it's been available for quite a while, still in print. And actually, the first edition is still in print, too. I just rediscovered recently, so which was 2015. So, and both of them talk about the housing bubble and how severe it is in Canada. And, of course, when I wrote the first edition and the second edition, I expected that the bubble would have burst by now, so I was early. But the analysis is a good description of what's actually happening right now in the housing market and the likelihood that there'll be a major correction, which has probably already started. So, So the first edition, 2015, has got a black cover, and the second edition, 2018, has got a red cover. So if people are looking to buy it, they can buy it at bookstores or online or by Kindle or Kobo or any of those other e-reader sources as well. And the thing that gets a lot of attention in the book and doesn't get much attention in the current media, except in one aspect, is debt. So debt is huge. Private sector debt especially is a problem. Household debt and corporate debt are the two private sector categories. And the government debt is becoming a problem because of what happened in 2020 and the huge spending that happened then in Canada. And that gets all the attention. Nobody ever talks in the media or anywhere else about private sector debt, only about government debt. And government debt is a problem. It wasn't a problem when I wrote the books, but 6 years later it is a problem. So now we've got all three sectors in trouble. And I guess that's unfortunate, but what can we do? Some people will have to struggle to make it through, and the majority will still make it through, but the more indebted people, especially speculators, are already starting to fall by the wayside in significant numbers. And areas to watch are like the condo market in Toronto is huge oversupply, and a whole bunch of people are unable to close on their purchases that they contracted for maybe 2 or 3 years ago before the building was built. So that'll be a big indicator, and it'll affect low-rise or single-family homes eventually as well, but that's a different category, so it'll take a little longer for that one to see the impact. So if you're looking for an immediate bargain, it would be in the condo market, although I'm not that excited about buying a condo ever, but if the price is right, I guess people will want to do that.
This week, the Bank of Canada rate dropped by 0.25% to 4.75%. If you're looking at a chart to interest rate, bull markets tend to rise in waves.
So the myth of an interest rate bull market is quite interesting. So in my weekend note, which comes out tomorrow, discusses this, so people can find that on Twitter at HMACBE, or they could sign up for an email to get it delivered directly to their inbox. But the chart shows, there's just the one I'm looking at goes back to 2003, and there isn't really any record. And I checked back to 1960s and 70s and 80s as well. There isn't any record of bull markets starting with interest rate cuts. In fact, the norm is, and almost the rule is, when the Bank of Canada, the Federal Reserve, the European Central Bank cut this week as well. So Canada and the European Central Bank cut. It's more likely to be a sign of impending recession. So generally what happens is they start cutting rates before the recession is officially announced as starting, and it can continue for quite a long time. In 2020, it was pretty short. It was less than a year. But in 2006, 2007, it lasted for a long time, 6 or 7 years before rates started rising again. And there was a bull market off the bottom, but it wasn't a great time to be buying when the rates first were cut. It's better to wait until a little bit later after there's been several cuts and the recession. Once the recession is officially declared, which is always occurs with a big lag, sometimes the lag can be as long as 9 months. Once if the recession is officially declared, then that means that probably rate cuts are just about done, and that's a much better time to buy.
Could the bank rate decline while at the same time mortgage rates increase?
Well, that's a great question. So what happened was mortgage interest rates peaked a while ago. They've been dropping, and not a lot, obviously not a huge amount, but they run independently. The mortgage rate tends to run off the 5-year government bond rate, or the 5-year GIC rate that the banks offer, and that's been coming down a little bit. So there may not be any drop in mortgage rates just because of the Bank of Canada 0.25%. I mean, 0.25% is not much. Rates went from 0, or basically 0.25% to 5% over a very short period of time, over 16 months, I think it was. And now we've come down a 0.25 point. So it's almost, on a graph, it's even hard to see. It's just a little squiggle. And so mortgage rates may not come down much at all because they've already come down a little bit, as have the 5-year government of Canada bond rates. So it may not be enough. People are not finding it easy to qualify, and they may find that they get forced to qualify at a similar rate to what they were asked to qualify for at before the Bank of Canada cut rates.
Do you think potential buyers will continue to hold off purchasing homes waiting for additional interest rate cuts? So
I think that, there's all different buyers, there's speculators, but let's leave speculators out of it because most of them are struggling right now. So if you're a first-time buyer or a move-up buyer, you're more likely to be, you're watching the price of homes come down, but your main thing is, can you qualify? Because it's been extremely difficult to qualify. The banks have tightened up a little bit, and I think they're actually checking on verifying incomes and stuff. And of course, with their higher rates, it's harder to qualify. So there used to be lots of exceptions and exemptions and all that stuff from the strict qualifying rules, but I think some of that's been changed a little bit recently. So the most important thing for first-time buyers is, can they find a house they can afford, and then can they qualify for the loan? And can the bank of mom and dad gift them a down payment? These are the biggest things. And but for people that are a little bit, maybe not the first-time buyers, but the speculators, more sophisticated people, if they think the prices are coming down, they're going to hold off. They don't care about a 0.25%, or even if it was 0.5%, or even a full percentage points. If they think the prices are coming down, they will hold off. And talking to realtors in the last couple of months, they said that they're getting bids, but they're very, very far below the ask price. So it's difficult to make a transaction with that situation. So sometimes they have to wait a long time for the right person to come along. Even with the 0.25 point drop in the bank rate, are the banks still tightening credit in Canada for loans, mortgages, HELOCs, and credit cards? So I think they are. It's impossible to know for sure, but I think the banks are. Well, there's a couple of things that happen in the bank system. One of them is pretty big, and it's not related to what we're talking about directly, but indirectly it might have a big impact. And that is, the TD Bank was in trouble in the U.S. for money laundering allegations, some of their employees. And the fine could be $2 billion, and even some people are now saying it could be as much as $4 billion. Now, in Canada, TD also got caught with money laundering, but the maximum fine in Canada is $9 million, not billion, but millions. So it's like a different universe. But given those kind of things, so the response to TD Bank, this has been going on for a while, but it's only just hit the front pages in this paper recently. The response was to just, they say they're spending $500 million to improve their anti-money laundering investigations within the company, within the bank. So that must be, I'm assuming that's mostly salaries. So that must be a lot of people, thousands of people across the U.S. and Canada. And the mindset then changes from a banker in terms of wanting to get, the maximum growth in the number of loans you put out the door and the number of credit cards you put out the door, which was the case for the last 15 years, probably since 2010, 2009, to now we're looking at, oh my God, we better be really careful about improving these transactions because we don't want to get into trouble with the authorities of the regulators. So it's that alone could have a big impact on qualify. And then, of course, as banks get nervous about defaults on mortgages, of course, have not ticked up much yet. But on credit cards and auto loans, they're starting to move up very rapidly. The big tell is the credit card balloon. So the amount owing on a credit card has gone up dramatically in the last few months. So what I think is happening, and I think this is right, is that people are obviously going to still pay their mortgages, but they're finding that they can't, at the end of the month, they can't pay off their credit card balance like they used to. So now they're starting to carry it over from month to month, and that's a really big warning sign. The banks, I just checked the provisions for credit losses, and they have not. They've moved up, but they went way up in 2020 during COVID. Then they went way down, and now they're starting to move back up again. So they're not, in a recession, in a severe recession like 2009. The typical annualized provisions for credit losses would be 100 basis points or 1 full percentage point. And right now they're a tiny fraction of that, like 15, 20 basis points, maybe 30 basis points. So it's really nothing substantial. It's moved up off the bottom, but it's not anywhere near recession levels yet. So that's all to come. But the banks are watching probably more closely, and they're getting more nervous. So that'll make it harder to get a loan for sure, and harder to get a credit card balance approved as well.
In the Vancouver area, we're hearing detached sales are now the worst in 40 years for the first 4 months of the year. In a housing bear market, are sales likely to continue to be low? Yeah,
well, there's two problems. It's like I understand in Toronto and Vancouver both that the inventory of single-family homes is sales are way down, but also the inventory isn't that great either. So it's very difficult to put together a sale. But the other problem in those areas are just the prices are just too darn high for people to afford, right? So as the banks start to scrutinize, that we still don't have. It's amazing to me, but we still don't have proper verification of the incomes before we approve a mortgage. And the really obvious thing would be when give the bank the authority to go and check with the CRA. If somebody says they made $400,000 last year working as a bricklayer or something, I think bricklayers do very well, but I don't think they make $400,000. All you have to do is call up CRA, and if it were allowed, and verify that, they find out they only made $100,000, $150,000. So that could be done very easily, very quickly, and it's not as big an intrusion in privacy as people think, which is what the explanation usually is for not allowing it. So, and that would get rid of a huge amount of the fraud. But there was a significant amount of fraud, I'm sure, in the mortgage application business, and so it's an overall tightening, and that makes it very hard because there just really aren't that many people out there that can qualify or that have the cash to buy those very expensive homes in Vancouver and Toronto.
Are homes currently priced too high to sell?
I mean, that's a generalization if I said yes to that, because there's obviously exceptions to that. But,
oh, no.
Yeah. But, it's hard to find a home in Canada that is reasonably priced. It's still, I mean, the two areas I'm quite familiar with because I live in Alberta were Edmonton and Calgary. But the last few months, even as house prices have come down in some suburbs of Toronto, they've come down as much as 30%. House prices have been going up in Edmonton and Calgary because people have been moving to Alberta. So, it's hard to even find a bargain in Edmonton and Calgary. So, compared to the U.S., prices are much higher. And even when you allow for the conversion, if you multiply by 1.4, let's say, you say $100,000 U.S., say $200,000 U.S. house, what is that? 2.8, 280,000, 300,000. Well, there's nothing in Canada available for 300,000 Canadian dollars. And yet there's quite a bit available in the U.S. for 200,000 U.S. or 300,000 U.S. So it's a weird situation. But it's been like this for a long time. It's been like this for more than 10 years, more than 15 years probably, where Canada's raced way ahead of the U.S. And I'm not quite sure that there's a full explanation as to why. Certainly isn't lack of land. It isn't a shortage of space, because we got way more space than the U.S. has. But maybe livable space. We're not as big as total space. But at any rate, it's a mystery, and I think the solution is for prices to come down. But politicians don't want prices to come down. The homeowners don't want. If the homeowner's getting ready to retire and is kind of relying on the equity in their home to finance their retirement, they don't want prices to come down. So the majority of people with power in the society would rather that prices didn't come down. And I think most elderly, wealthier people would rather have prices stay high, and they can afford to give their kids a down payment that allows them to get into the housing market. So it's hard on younger people that don't have a bank of mom and dad that's well financed, and it's harder on immigrants and people like that to get into the housing market. The solution that works for those people, though, would be for house prices to come down a lot, like 30, 40%, or even 50%, and that would bring things into line with incomes, and then we could start over again. But it's going to take a pretty nasty recession for that to happen.
More and more homes in Canada are owned by investors. Does this usually happen just before housing markets collapse?
Well, the investor mania has gone on for a long time. It was very active. When I wrote the first book in 2015, it came out. I was researching for at least a year before that. So 2014, 2015, I remember asking, because I was amazed at these speculators that were buying condos in Toronto. And these condos are not very attractive because they're quite small. In those days, they were paying, say, $500,000 or something like that. But if you do the math, it doesn't really work with condo fees and taxes, property taxes, and occasional special assessment and all that. It's hard for them to make any money. And so I asked them, I pushed them pretty hard, a couple of them that I met, and said, really, are you really making any money? Really, are you making money? Kind of like, they reluctantly admitted that they were losing money every month. Not a huge amount, but, not counting the special assessments, and so, maybe not fully accounting for all expenses. They're still losing $100, $200, $300 a month or something like that. So then I said, well, why are you keeping it? Why don't you just sell it? And the answer was universal. It was, well, prices are going to go up, and then I'll sell it later for a bigger profit. It's kind of like, and some of the people I talked to already had a profit, and so they would rather lose money renting it out. And then, of course, it's worse than that, because the renters bang the place up, and then sometimes you have vacancies. You have to kick one renter out. You have to wait a few months to get another renter, and so on and so forth. And so speculators, it's tough for them, and they haven't had any really good luck for several years now. So, and then the banks are making it much more difficult for speculators. And an even bigger thing is that the CRA started a couple of years ago, but they're just sort of working through the files now to go after the speculators for capital gains tax, because most speculators, I think, obviously not true for all of them, but I think it was pretty standard that they sort of ignored the fact that there's no exemption for capital gains on a non-homeowner occupied principal residence piece of real estate. and they just weren't reporting the gains. And but apparently the paper in the article in the Globe and Mail today, I think, says that they went back 9 years to find somebody that had sold the property. So that's really rude for that. Don't feel sorry for that person, but it's pretty much of a shock to somebody. CRAs going back 9 years to catch somebody. So it's a lot of problems for speculators. But one of the bigger problems is, of course, prices are falling, and the flood of condos on the market is just in Toronto especially, but probably in Vancouver as well. The volume is just enormous. Like, the listings have gone through the roof, and they're just not selling. They're not attractive as long-time residences for a family. They're just basically speculators buy them, rent them out to kids or young adults who don't stay for long because they're too small really to enjoy, and then hope to, or some people buy them as a pre-construction contract. They don't even expect to ever live in or to worry about having to get a tenant. They just plan to flip them before they have to close, and that has become very difficult to get that flip going. So that's probably where we're going to see the big crisis hit pretty soon here. And I don't think the rate cuts will be fast enough or deep enough to make any difference to that situation.
With continuing low sales, or some realtors leaving the business?
Well, they might. The annual fees are, I can't remember now. I think I was surprised they're fairly high, like $14,000. Is that, anyway? Somebody else will know better than me what the actual number is, but it's not trivial. And but most of them in my experience in past, like in 1990, we had a big slump. In the early 1980s, we had a big slump. We haven't had a big slump for a long time, but in those previous slumps, when you go back 30, 40 years, the realtors tended to hang on a long time because they most of them had at least one or two possible, a homeowner had promised to use them as a listing realtor if they sold, and they figured they were probably getting ready to sell pretty soon. So if they leave the business, they lose out on that chance to get that sale. So as long as it doesn't cost them too much to stay registered as a realtor, they might just linger on. So that's what happened last time. It took way too long. It was really tough on the realtors because they've got all these people that are like doing one deal a year, but it's competition for the more serious ones, and but everybody's suffering, I'm sure. I mean, it's not just the people that are used to doing a lot of deals every year have got way fewer deals, and those people spend a lot of money on advertising, but they're not going to leave the business right away. No, they'll hang on longer than they should, probably. Unless there's an area that's really attractive, another segment of the economy that's really attractive to go to, and then they would leave. But otherwise, they'd hang on.
What areas of the Canadian economy are you bullish on?
I'm struggling to find. So the only one I can really think of is well, first of all, let's talk for just a minute about what's not great. So banking is not great, and this is where a lot of people have their money in Canadian bank shares. But I mentioned a minute ago about provisions for credit losses. It's only just the very early innings. It's like the first or second inning in a 9-inning ball game, because provisions for credit losses haven't gone. And those provisions go right into the earnings statement, so the banks will start showing their share prices will actually start coming down before the provisions go up, but eventually and then things like this TD investigation. So that's a huge sector. The financial sector is huge. Then the real estate sector, well, I wouldn't touch that because there's problems, not just in residential, but there's problems in commercial, huge problems actually in commercial, office towers, condo buildings, of course, we talked a little bit about, and there's maybe some segments of commercial that are okay, but not great. So those two together take out like a huge portion of the Canadian economy. Then there's oil and gas. Well, oil and gas, what happens in a recession is the demand for oil goes way down. And we're actually starting to see that. We had a report in the last 10 days about big increases in inventories of crude oil. So that's a big part of the Canadian. That's the number one export from Canada. Well, that's starting. And then you got autos. So autos, there used to be a huge auto industry in Ontario, especially. Auto parts and auto manufacturing that was shipped to the U.S. But that's all changed because of the advent of the electric car. So there aren't very many plants to actually make electric cars in Canada compared to, there's no Tesla plant in Canada. China is booming electric vehicle, but even there's a bit of a slump going on with oversupply maybe. So that's another major sector that's not doing very well. So we're running out of sectors here. Government sector is booming, of course, and but the one area is the mining sector. So there's in the transition to a more electrified economy, which I believe is coming faster than people realize. There's a much higher demand for things like copper and nickel and different metals, which Canada has. Canada's not the leader anymore in any of those categories, but Canada does have a significant amount of mines that make those kind of basic metals, and so that would be an interesting area. And then Canada has a lot of production of gold mines in Canada, and the gold market is booming. So mostly in the back of investors buying it, central banks buying it, that sort of thing. So those would be my number one sectors in Canada. Used to be a booming junior stock market on the Vancouver Stock Exchange. You might remember that, Jim. And, it was mostly mining shares, and it was gold mining shares especially, and it was a lot of fun. There were a lot of scams too, though. You got to be careful. A lot of scams, but a lot of speculative froth there, and chances to make some real money too. And of course, most people that made real money in those things would reinvest it back into the next one, and so you got to be careful to maybe take some of that gains if it does get really hot again in that sector, and sort of put them into something safer, because those things do tend to go boom and then bust.
Have increasing interest rates caused a slowdown in consumer consumption?
Yes, we're seeing it in Canadian Tire, for example. I'm amazed, actually, Canadian Tire. I don't know how that company, it's sort of it's like Tim Hortons or something in Canada. It's an icon. Their quarterly results, I think we've talked about this before, are poor, are very poor. And retail sales in general are very poor in Canada. When you consider the fact that we've had all these new residents come into Canada, most of them are temporary residents, but they're living here, so that means they got to eat, and they got to go to restaurants, and they got to spend some money. Adjusting for that, there's some substantial increases. Retail sales per capita are actually probably down a little bit, and so that's the first sign that the consumer is struggling, and they're struggling with high interest rates. They're not yet struggling with job losses. That's where more comes when the recession actually starts, if it hasn't started already. But for now, it's mostly that probably for most people, it's if their interest rate on their mortgage gets adjusted to the new reality, they find that they just don't have the money left over at the end of the month, and then food costs have gone way up too. So that doesn't leave nearly as much money for buying that special renovation project at Canadian Tire or something like that. So it's showing up for sure. And I mentioned already, credit card balances are ballooning, which is a sign as well. People don't voluntarily cut their spending. They have to be hit over the head with a hammer. So that's the way it works. So the symbolic hammer in that consumer is credit, and that starts with the credit card, and then it goes to the HELOC, and then goes to the auto loan, and then goes eventually to the mortgage, unfortunately, as well. Sometimes it gets to the mortgage. What's
the latest on auto sales in Canada?
Auto sales are interesting. The average loan payment has gone up. We're talking $700-800, and I've seen numbers. Now again, there's much better data in the U.S. than Canada, so you see it more in the U.S. initially, but they've been creeping up higher, by $100 a month, even $200, $300 a month, and of course that is pretty immediate in terms of when people go to get a car, they get hit with that reality fairly quickly. But the car makers, so the reason it hasn't shown up in the car makers is, according to some of the people that follow automobile dealerships, which I think are pretty reliable, watchful analysts, they are saying that the automakers are sending cars to the dealers' lots and counting it as a sale, which is standard industry practice, by the way. And the dealers got 1 or 2 or 3 or 4 months or 6 months to sell that car before the interest clock starts ticking, right? So they get a reprieve. So the dealers are flush with inventory. I was at the Tesla service center. They're not dealers because they're not independent dealers, but there's actually no room left on the lot to even when you go to visit them. There's no place for you to park your car because there's so much inventory sitting on the lot. So even Tesla is struggling to find buyers. And then of course the other problem with the auto sales is the Chinese are coming, and they haven't hit here yet, but the new cars coming out of China, most of them are either hybrids or fully electric, are just amazingly good and really cheap. So you can tell there's a problem with auto sales because Joe Biden, as part of his campaign, I guess, but he just said he's going to jump the tariff from 25% on foreign autos to 100% on foreign autos. So Tesla is actually exporting from China Model 3s that are as good a car as I've ever seen. They're coming to Canada. I don't know if they're going to the U.S. or not, but they're going to Europe as well. And the price has come down a little bit, not a whole lot, but it's come down a little bit, maybe 20% or so from the peak at price it was before. So better car for 20% less. So it's a very challenging market. I wouldn't be surprised to see some big companies get into financial difficulty fairly soon because there's a lot going on in that segment. Not just electric competition, but financing troubles with consumers that just can't get the financing to get that car.
Major automakers are introducing more and more electric vehicle models. Do you think these EVs will be competition for ICE vehicles and or Tesla?
Well, Tesla is going to face, they really haven't faced much competition. Now, the Tesla's responding because they cut their prices on their models and they've done what they can. But there are a lot of people that are loyal to like GM or Ford or that, and those companies have. I just saw an announcement that Stellantis, who used to be Chrysler, they have a Jeep Wagoneer coming that's going to be fully electric. It looks like a pretty interesting car. And then GM's had a couple of announcements of some really nice-looking cars as well. So, yes, the answer is there's a huge amount of competition coming. And now Tesla's quite a ways ahead on a lot of features because they've basically had 12 years of practice on this from 2012 when the first Model S came out. But the competition is really heating up. I'm not so worried about GM and Ford because the American government will protect them. But the ones that I really wonder about are companies like Toyota and Volkswagen. They're the two biggest. They were the two biggest automakers in the world, and their strategy on electric is very poor. And in my opinion, especially Toyota. Toyota just got caught on fudging the numbers on emissions. Similar to what happened to Volkswagen. Volkswagen got caught about 5 or 6 years ago, I think, after some of the other automakers did in Germany. But Toyota just confessed to altering the results to get approval that they didn't deserve. So, and Toyota's been pushing this crazy idea of hybrids, and hybrids aren't crazy, but it's not a long-term strategy. And hydrogen cars, they have a model called the Mirai, M-I-R-A-I, which is crazy because there's no fueling stations in hydrogen for those things, so you can't sell them, you know. So there's a lot of interesting stuff happening in the auto industry, and generally at a time when sales, especially if we go into a recession, the sales are going to be in a pretty big slump.
The Dow hit 40,000 points, NASDAQ 17,000. Could we see the Dow at 45,000 and the NASDAQ at 20?
We could, but it might not be for, depending on when the recession starts, we could see a drop, and that would delay the reaching of those new high numbers for a long time, like several years. Now, the good thing about the stock market is after it goes down in a recession, on average, they go down 30, 40, 50%. 2002, the NASDAQ went down something like 80%, and the overall market went down 50%. But it rallied very quickly. Like from 2002 to 2007, it came back all the way back and hit a new high before the global financial crisis started in 2008. So these cycles are quite quick and they reverse quite quickly. But yeah, I think we're more likely to see a correction before we hit those new high numbers.
Gold hit another new all-time high in May. Could that have been a sell in May and go away event?
I don't think so. Not on gold. I think gold is, I'm going to betray my bias. When I started in the industry, 1978, gold had just started to run, and it peaked in 1980 at $850 an ounce, which is about $3,500 US today. So inflation adjusted, gold's at $2,400 now, so it's still got about another $1,000 to go to hit the old peak if you adjust for inflation. But the gold mania was, at that time in 1980, was much more pronounced than it is today. I think because today we've got things like Bitcoin and other meme stocks that we can buy and speculate on, and we don't. But in those days, gold was sort of it was much simpler times, and there was only a couple of things like gold that you could trade in that were really exciting. And people got very carried away with gold back then because inflation was over 10%, and it was kind of like, yeah, this makes sense. But the other thing that's happening today is, so we've had a run in gold that's been quite substantial, about $1,000 from $1,400 an ounce to $2,400 an ounce over the last few years. And the gold mining shares are starting to respond, but they're still relatively cheap compared to the gold price. But the other thing that's happening with gold, the commodity, is central bank buying is really strong. So China especially, but other central banks as well. The only central bank in the world that doesn't have any gold, as far as I know, is Canada. So Canada sold all its central bank gold reserves, but and they haven't started buying back yet. But that was quite a few years ago they sold. But other central banks are buying gold, and they used to keep U.S. dollars as part of their reserves. But in the case of China, they would earn U.S. dollars by exporting to the U.S., and then they would just leave it at a U.S. bank in U.S. dollars in New York. And now it became part of the government reserves. At least some of it did. So, but now they're aggressively going out and trying to replace reserves, replace U.S. dollars in the reserve accounts with gold. And so gold is now taking over the second place. It used to be U.S. dollar first, euro second. Now it's U.S. dollar first, gold second. So euros dropped to third place. So that's a pretty big development. And in that case, they had to go out and actually buy it. They weren't just automatically getting paid in that currency. They had to go and switch. So they're switching. Obviously, they're actively switching receipts they're getting in U.S. dollars primarily, or euros, and exchanging it for gold, which is surprising and interesting.
Hilliard, thank you so much for being on This Week in Money.
Great to be on your show again.
My guest has been Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, MacBeth.McLeodPartners.com. Find him on X at HMACBE. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Martin Armstrong, and Hilliard MacBeth. And thank you for listening. If you have any questions for the show or for our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.